Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined by Kevin Cook, and we've brought you two Zacks #1 ranked stocks that are pretty much crushing it. And these are a couple stocks you should be paying attention to here as we head into the end of the year. The one I'm going to talk about is in one of the hottest industries. It's Toll Brothers, one of the home builders, and it's the only luxury home builder that's publicly traded. So what do the numbers look like right now on the home building side? Let's dive right in and take a look. Okay, so here we're looking at the magnitude consensus trend down here at the bottom down here. And you can see that the trend is our friend. It is going up here for 2020. You can see, considerable movement here, both for this year and next year. Now, this is below for this fiscal year what they did last year. And you can see that up here for the last year's numbers that it's a decline of 24%. And I know what you're thinking, like, hey, doesn't that mean it's normally, like a value trap? That's not what we want to be looking at. But part of that decline is due to the fact of the COVID impacts early in the year. They are catching up with the rebound in the sales and their back order, but it's going to take a little bit of time for all those new sales to run through their business. And we are seeing that now into 2021, fiscal 2021, with this 53% year-over-year earnings growth that's happening there. Now, you can also see that some of the analysts here are getting a little bullish even in just the last 7 days, because several other home builders have already reported or pre-reported some updates on what their quarter is looking like, and they're reporting the hotness continuing into September here and probably beyond. So they're getting bullish on even the upper bracket, which is what Toll Brothers, pretty much specializes in. They have custom homes all the way up to $3 million in some parts of California, but they are nationwide. They do have an entry-level product that's only partially customized. They're going for the new home buyers on the luxury side, but those average around $500,000, and that has been a big part of their business. So about 25%, they're seeing strong sales on even that entry-level area. So that's why you see the earnings estimates getting a little more bullish. We can take a look at what it's looked like over the last 5 years here, and you can see the decline here in 2020, but the sharp upcrease there with that brown line over here on 2021 here. So that's kind of mimicking where the shares are going, because if we take a wider look out at the shares, this is a 10-year price chart, and I brought the 10-year because I wanted to show what happened when it finally hit the bottom there in 2011. You have to go all the way back here to the bottom of the housing bust, and then 2012 was the best year for the entire home building sector in years, and it was the #1 performing sector in the S&P 500. And you can see that here into 2012, the big upcrease, but then they went nowhere. Shares have been basically trending water for several years, finally got a little boost there in 2017 as those mortgage rates came down. Shares got a boost again. Then the big downturn in the coronavirus sell-off, that was a buying opportunity, literally went back to test those 2011 lows there, and now the big surge up. So the question remains, how much more is in the tank here? It's trying to test those prior highs, prior 10-year highs. But we got those earnings estimates on the increase. Everything is working in the home builders' favor here with the record low mortgage rates. You have people wanting to move out of certain types of housing and out of the dense urban areas. So the home builders specialize a lot more in the suburbs, although Toll does have some business in New York City, does have an urban business there, but the vast majority is in the suburbs. And that's where we're seeing these hot markets, like the Virginia suburbs of Washington, D.C., in Boise, Idaho, in all of Texas, in most of Florida, and in the southeast, like the suburbs of Atlanta. And that's where Toll Brothers is really able to cash in. Now, the shares are only trading at about 16 times here, despite this huge rally, because those earnings estimates keep on getting increased, and we keep seeing good things happening with on the E side, on the earnings side. So these shares are still relatively cheap. You do get a dividend, and they did not stop paying it even during the coronavirus here. But it's not the greatest dividend, but it's about 0.9% right here. So you are getting something in addition. But I'm looking for the breakout here, and we may get that in this upcoming earnings season with some of these home builders, especially Toll, as this strong housing demand continues. Now I'm going to turn it over to my colleague, Kevin Cook, who also has an interesting stock on a little bit different area, and he's going to let you know what that is coming up right ahead.
My top pick is Square. I wrote this bull today last week, and I recapped a theme that I've been on for a couple years, actually. And I profiled two guys who have told you to be long Square. And just to set the context here, remember when they knocked Square back down to 40 during the Corona crash? It was just, it was unreal because, it seemed like everybody thought that the death of retail because of coronavirus was going to kill Square. And actually, it's just the opposite. We'll look at some of the earnings. But the two guys that I always profile in Square are Jamie Dimon, because Square is actually Jamie Dimon's favorite mistake. I'll show you a few comments from Jamie Dimon. He was attended a conference, an American banker reporter, Andy Peters, was there, got some quotes from Jamie Dimon. Jamie Dimon's like, yeah, they came up with this little dongle to process stuff, and it was a great idea. and he understood what that meant, what Square had done 3 years ago, where they were creating the ecosystem. That's why I call them the Apple of fintech. Square's not selling products, but they're creating a small business ecosystem that does so much for the small business person. Tracking sales, doing accounting, moving money, taking credit cards, point of sale obviously was the first thing, but then around point of sale, they created this whole ecosystem. And Jamie Dimon says, hey, we didn't give them that opportunity. He also talks about, giving small business loans, another aspect of the Square ecosystem. Dimon realizes they were late to all of that. Jamie Dimon told you a couple years ago, buy Square and stay long, in so many words. And the other person is Dan Dolev, who has been the most bullish analyst forever. And he's moved around a little bit. When he was at Nomura 2-3 years ago, he had a $100 price target on Square. And what was ridiculous is, coming out of the Corona crash, you had banks like, let me look up here, UBS and BofA, Bank of America, downgraded sell, after their June quarter, saying, sell, underperform, and the stock had just gotten back above 70. So this is actually in the spring, before their June quarter, which blew the cover off the ball. But Dan Dolev was always there. He went to Macquarie for a little bit. Then he resurfaces at Mizuho, another Japanese bank, with a $225 price target. And this was in August. It's the street high. And the guy's always been right. The one thing that Dan Dolev has done is he had a tracking model for downloads of the Cash App versus PayPal's Venmo. And he saw the trend continually, quarter after quarter, that there were more downloads for the Cash App. It was becoming integral to the Square ecosystem. And whereas, Venmo, what's Venmo for? I mean, I just Googled here this morning, Cash App versus Venmo. And, Venmo has limited capability. It's fun to send money between friends and that kind of thing. But the Cash App does so much more for the small business person. Here was the call from Dan Dolev when he just hops on with Mizuho, taking his price target up to 225. Here were some of his comments. Study shows 4 times upside to Cash App Square is best positioned to benefit from the tectonic small and medium-sized business dislocation, and that's really the big theme. That how is small business adapting, and what do they need to be able to quickly move online? And Square's even providing that capability. You want to create a store online, so let's take a quick look at the estimates here, just to see, why some analysts got left behind. What they missed is that here we have sales estimates. Current year, we're looking at they're going to crack 7 billion, which is going to be over 50% revenue growth. You'll love to see that in any kind of software or fintech. And so you have 9 analysts here. High target is 8.5. Low target is 5.1 billion. But there it is that the Square has adapted and coming out of this strong. Now the earnings, we're going to take an earnings hit this year, but estimates have gone back up. So look how bad everybody thought things were 90 days ago. They had this year's estimate down to 20 cents. It's more than doubled. Next year is looking pretty strong. I expect next year's estimates to go up above $1.15. And here was the surprise. It surprised everybody. This 350% EPS beat. So, Square making new highs today. I think it had just cracked 190 for the first time. So that's fun to see. Big props to Dan Dolev. And, I'm not saying run out and buy it here at 180, 190, but, you want to be a buyer of Square. If we get any corrective action in October and this thing comes down to 150, definitely want to buy it there. And new positions could be nibbling as we come back down to test this 165, 170. All right, that's my take on Square. We'll talk to you soon.